Alright guys, so now we're going to get into the second type of strategy that I trade. This is one of my favorites and it's called the breakout strategy. So let's get into it. So basically, this breakout pattern only happens when a stock is moving in an uptrend, and it basically happens when price corrects over time. So remember, when there's a buy setup, price corrects in the form of a pullback or a retracement. But when it comes to a breakout pattern, it basically corrects when it consolidates or sits at the same price over a period of time. Think about it of the ship example I told you before. A ship just can't go, around the world without taking any breaks. Sometimes it has to dock, has to fuel up, has to let the people rest, the passengers and the employees rest, get all the supplies before it can continue going around the world. Same thing applies with this type of price correction. It moves up, it has to have a rest period. The momentum needs to come back before it moves back higher again. So with this type of setup, we basically enter the trade at this point right over here when price breaks the resistance level that it's created. Because remember, when candlesticks overlap over a certain period of time, it creates a level of support and resistance. So we enter the trade at this point when price breaks the resistance and our stop loss is below the consolidation. So yeah, this is one of my favorite strategies. So what is a breakout? Let's get into a little more into depth. So why do stocks move sideways? They move sideways because they have to correct in price. So it's basically when the stock is staying in the same price range and it does not move below it and it does not move above it. It's kind of moving sideways in the same price range. So we enter when it breaks this base that it created, when it breaks the base that is created. So yeah, this happens on bullish uptrends. You can see this is moving in a bullish uptrend, and it happens when price bases after a rally. And something you need to know is the best type of base breakout, the best type of base it can have is when it bases at the top of a rally. So as you can see, this moved higher and it based at the very top of this rally. If it moved back down and based, it would still be good, but the best type is when it bases at the very highs of the rally just made. As you can see, it moved up here and it based at this high price that it made right here. So we enter the trade once it breaks this base. Once it breaks the base that was happening, once it breaks the consolidation, breaks the resistance, this point is when we want to be entering the trade and to catch the move higher that it's going to make. So remember, when candlesticks overlap in price on a base, it's in an uptrend and then it bases, a level of minor resistance and minor support is created because it can't move higher than it because there's a level of selling above it whenever price reaches that area, and there's a level of buying whenever it gets down here. So basically isn't closing it. It's like two brick walls smacked over the base that keeps it. And once it breaks that brick wall, that confirms that now the resistance level is broken. There's now more buyers than sellers, and that's when we want to enter the trade. So the first criteria you guys want to look for when entering a base breakout setup is that you want to be entering once it breaks the resistance of the base. So in this example, we see there's overlapping candlesticks. So we can even draw a level of resistance above it and level of support below it. And we want to enter once it breaks that level of resistance. Emphasis on the word breaks. If we see it basing in a bullish uptrend, we don't want to just randomly enter the trade right here because we think it's going to break out. We want to actually enter once it physically breaks out of that resistance level. So, and you want to put your stop loss where the support level is. So if it fails, your stop loss is at that level of support because there tends to be buying at the area. So you want to have your stop loss basically where there tends to be a lot of buying. And you want to also make sure that, notice how the stop loss isn't touching the candlesticks. You want to give it a little bit of room below the overlapping candlesticks to give it a little room for the buying to actually, come in and push it back higher. So here's an example of a good base breakout, and we can draw the line above this consolidation. You can see the overlapping candlesticks. You can see it's in an uptrend. So we could draw a line above it. We could draw support below it. And at this point right here, we would want to be entering the trade once it breaks this consolidation. Not right here. We want to enter over the highest point of the consolidation, the highest point of the base. So you can enter it right up here, and then it catches, move higher. Now we're going to get into the next slide, but notice how the 20 MA is close to price. We want to enter when the 20 MA is close to price. So criteria number 2, the 20-day moving average. So first thing we want to know is that, first of all, the 20 MA is in an uptrend. We want to see the 20 MA is moving higher. We don't want to see it moving flat. So we want to see that the 20 MA is, under price. We want to make sure it's under the price, and we want to make sure that it's curling higher. Also, we want to make sure that when we do want to enter the position, we want to make sure that the 20 MA is close to the price when we want to enter. Notice how this example, it's close to price, and you can see why the correction happens because it rallied higher here. You can see how extended it is from the 20-day period moving average. So when it's extended, it has to either correct, price correction has to happen, either in a form of a pullback or in this case, a consolidation. So we could draw our level of resistance, our support below it, and once it breaks it, we can enter. And yeah, we do not want to enter trades when the 20 MA is extended. So look at this example right here. I want you to ask yourself, which example is better? Now, this example is obviously better. We could see that it's forming a really nice base breakout pattern. But the problem is that it's just way too far away from the 20-day period moving average. And just because the setup looks good, if it's really far away from the 20 MA, that can be a turning off point for me entering the trade. If it's really far away, I'm not going to want to enter the trade because I feel like the price correction hasn't even happened long enough. We want to wait. And if it ends up going without us, that's totally fine because it's not a high quality setup if the 20 MA is, if price is extended from the 20 MA. So you want to always be making sure when you're looking at these setups that you're looking how the 20 MA looks on multiple time frames. You want to make sure that it's not extended on multiple time frames. So, if it looks close on the 1 minute, but on the 2, 5, 15, it's super extended, then that's not good. You want to make sure the 20 MA is close to price, curling higher on multiple time frames. So here's an example. We can see that in this chart, we can see it's in an uptrend. We see a move higher. We could see a little pullback. This is like a little buy setup. And we can see move higher again, but you notice how far away it is from the 20-day period moving average. It's really far. So we can see it actually correct in price. And then right here, when it gets really close to the 20 MA, we can see a very tight consolidation. It's moving very tightly. And we can put our entry above this consolidation right here. And we could put our stop loss below it right down here. And then look at that beautiful follow through. Once it broke that resistance level, it popped and we could have entered the trade and captured it. So this biggest point here, notice how we entered the trade when the 20 MA is very close to price and it's curling under it and it's curling higher. So the third criteria is that during the base, we want to be looking at the volume. It is very important that while it is consolidating, while it's moving sideways, we want to see that there is continuation volume. Make sure to go watch the volume video if you guys forgot about this, but yeah, when it's moving sideways, we want to see that there's continuation volume during the base, which suggests that price is going to continue moving sideways in that direction. And then we want to look for an igniting bar. Remember, igniting bars suggest a volume spike after a continuation volume, suggests that a move is about to happen. So if we see this volume spike, we don't just randomly jump into the trade, but it's a confirmation that it is actually higher. So we see a volume spike, we get ready, we put our entry into the system once it breaks the resistance, and then we enter the trade. So if you guys don't really remember this, go watch the volume videos. But yeah, we want to see continuation volume and then we want to see igniting volume. So this is an example of a primary breakout. So we're going to see this, all the time. But in this example, we see that there's a curling 20-day period moving average. We see this as an uptrend. And then we see consolidation because it's extended from the 20-day period moving average. We see that there's a consolidation. It forms a base breakout pattern. There's a resistance level right here. And we could have entered this trade. This is the first entry that we see on this setup. It broke the resistance. It's close to the 20-day period moving average, and we could have entered the trade. Now here, we actually see that the resistance level actually now becomes a support level. And we see that there is a pullback in the form of a buy setup. So this buy setup is now moving back into that previous resistance level. So if you actually didn't catch the trade the first time or you missed the initial base breakout, this is an excellent opportunity for you to actually jump into the trade and catch it as a buy setup. And notice how that the 20-day period moving average is actually close to price both times. It's close to it on the initial entry and it's close to it on the secondary entry. So you would enter this trade either through the base breakout, have your stop loss down here, or you can enter it on this buy setup. You have your entry above this entry bar, your stop loss at this new support level, and now you can enter the trade. So that's basically as simple as that. There's multiple opportunities in the market, so you could capture this twice. Here is an example of a base breakout turning into a buy setup. This isn't the most clean example, but you can see the point. We see that at this point right here, it's in an uptrend. We see that it's super extended from the 20-day period moving average, so we can see that price correction happens, and it happens in a consolidation. And honestly, I don't think I would have taken this trade because it's still extended from the 20 MA. So I would pass on this trade, but it's still a base breakout pattern. Entry above the base, stop loss below it, and then moved up. But here we actually see an opportunity of a buy setup. Now that it's correcting in price back to the 20 MA, we can actually enter this trade as a second opportunity. We could put our entry above this entry bar, our stop loss below it, and we can capture the rest of the move higher. So sometimes if you see a base breakout pattern and it's extended from the 20-day period moving average, then you can look for a secondary entry as a buy setup once price gets close to it. So we also would really like to see that when that base is forming, it is basing at a prior resistance level. This can give us even more confirmation that once it breaks the resistance, it's going to pop. So let's say there's a stock, it touched this resistance level and made a pivot and it created the resistance level. And then later on, when it's in an uptrend and it's consolidating at this resistance level, this is an even better confirmation that the stock is bullish once it breaks it. When it breaks a major resistance, a resistance that has happened in the past, and it's a new resistance that is currently created now, it's like a double wall. So when it breaks that wall, it's even bigger confirmation that buyers have won the battle. So we can put our entry above the resistance, our stop loss below it. Here is an example of where this happened. We see the stock, it touched this area, it created this area, and it pivoted. And this basically created an area of resistance up here. And then it moved down in price, and then it moved back up. And notice how now it's in an uptrend. We see a curling 20-day period moving average, and now it's consolidating at that prior resistance level that was made in the past. So this is an even more bullish sign. Plus, we have the rising 20-day period moving average. So once it breaks that resistance level, that's a great opportunity for us to enter the trade. And we're not always going to see this happen all the time, but if you do see it, it's an even better confirmation that it's a really high quality setup. Here's another example of a beautiful base breakout. I don't really show the full chart here, but down here we can see that the 20-day period moving average is moving sideways. It's moving through price. So we don't, like it. But here we see, it's kind of basing, and here we see price starts curling under and it's curling higher. Then we can put our entry above this base, our stop loss below it, and then look at this beautiful move that it made here. It popped away from it. Once it got extended, it kind of corrected in price a little bit because it's far away from the 20 MA. And then once we saw it get closer to it, it bounced up again. Okay, so now here's another example of a beautiful trade that I took. I think this is the 1 or 2 minute time frame, but this stock basically gapped up in price, which means I had a bias that it's going to move up throughout the day. And then it kind of pulled back, and the 20-day period moving average was kind of flat. It was kind of downtrending. It was flat. And there wasn't really a beautiful entry right here because we don't like breakouts when the 20 MA is above price or going through price. But notice here how the 20-day MA starts curling under price, and it forms a base breakout setup. Look how tight that base is. So at this point right over here, we can see the 20-day is literally under the price. We could put our entry above this consolidation, stop loss below it, and then it popped, and we can capture that move higher. So you could either choose in this case depending on the scenario. We'll go over it later, but you could have your stop loss under this very tight consolidation if you want better reward to risk, or you can have it under this little base over here. So it depends how aggressive you want to be and how tight you want your stop loss to be. But this was a phenomenal opportunity to enter the trade. Here is another example. We can see that the 20-day period moving average is moving flat. It's moving through price, so we're not interested in it. Now that price moves above it, we can see that the 20-day period moving average starts curling under price. It forms a base breakout setup. We could put our entry above the base, our stop loss below it, and then, it's as simple as that. And it is as simple as that. We enter above the base, our stop loss below it, and once it breaks the resistance, we catch the move higher. And it's just a beautiful setup. It's very simple. Most of the plays we're going to see are either going to be breakouts or buy setups or a combination of the both. So breakouts are just honestly very simple topic. You just enter once it breaks the consolidation. Your stop loss is below it, and very simple, very beautiful. I love taking base breakouts. And that's basically the whole video, guys. So go on TradingView. I want you to go look at a bunch of charts and try to see if you can identify any base breakouts by yourselves. But yeah, very simple topic. I love taking these trades. It's honestly not that hard. And that's it, guys. Just make sure you have all the criteria written down, and let's get into the next video.